the sequential dollar revenue growth looks a little tepid, partly because of the cross-currency hit, I guess. While PES and IES and digital have showed positive contribution, what led to the drag in SAP and products as well as your platform division?
Oh, thank you for having me. It's a pleasure to be here. I think if you look at the trend of the last several quarters, there has been consistent growth, profitable growth, not just in the top line, but also on the bottom line. In some quarters, it's been higher than the others. As far as the last quarter is concerned, you're absolutely right. The growth, if you look at our solutions and services business, there is a 3.5% quarter-on-quarter growth, that has been registered. And it's driven by product engineering services, where we continue to make the world of automotive and mobility safer, smarter, and cleaner. Digital transformation has also contributed to that growth. However, the products business went down quarter on quarter quite a bit, and that's because of some of the products that we've created to comply with the government regulations, and those regulations got postponed. So that revenue has been pushed out a little bit. So that's where we are. SAP, we believe that it'll come back to growth in the next 1 or 2 quarters. So overall, if you look at our business, we'll continue to grow with a healthy growth rate on the product engineering services. And the IT growth led by digital will also continue as we get deeper into the year.
Okay. What is the decline you're expecting from SAP in Q2? As the press release says, it'll be a soft performance in the near term, with recovery expected only in the second half?
I think if you look at, it has 2 components, right? When the revenues that we count in SAP are mostly the systems of records, there is also SAP revenues that are related to systems of engagements and systems of insights that are clubbed into the digital transformation part. So that the second part continues to grow. It's just that some of the larger projects are getting over on the systems of record side. That's why we have had a soft quarter last quarter. This quarter is likely to be soft, but there is a healthier pipeline that gives us the confidence that the growth will come back in the SAP as view too.
Okay, how much does the digital account for in the overall mix now, and at what pace is it growing compared to your other growth engines, that's auto and engineering services?
Absolutely, good question. The way we look at our business is there is the product engineering services part, and there is the enterprise IT part, which has a digital component to it, and then there is the products part. The product engineering services, as you know, has been growing tremendously, almost 30% year-on-year growth. Again, last quarter was no exception. The digital transformation, it comprises of about 18-19% of our revenues, and that part is also growing in double digits, and we expect it to grow continuously on double digits for the rest of the year.
Geographically, US, which accounts for over 60% of your revenue, saw decent growth, but cross-currency in Europe weighed in on sentiment, and Asia too shows a decline. Will US continue to be the growth engine with double-digit growth likely there?
US will, I think the good thing is US is looking up. I think the trend has been positive, and we are also positive in terms of keeping up with the growth in the US. Europe, you got it right. I think it's the cross currency that hit us a little bit. And there was also some revenue which we couldn't recognize, especially on the product engineering side in Europe. But the product engineering services business continues to look solid in Europe. After a few soft quarters on the IT side in Europe, that business has actually picked up. So we believe that for the rest of the year, we'll see some growth coming back in Europe. As far as Asia is concerned, we have actually had close to 4% quarter-on-quarter growth in our services and solutions business. The decline that you see is all because of the products business that went down. All of our products business is concentrated in India, and because of the postponement of some of the government regulation that were to come into effect, I think that business has been pushed out. But the services business continues to grow in Asia for us.
Okay. What about the operating margins? Because they improved in the first quarter despite lower utilization, and had it not been for the merger-related expenses, they perhaps would have been even better, I'm assuming. With the focus
Yes.
on profitable growth and the rupee tailwind, what's the EBITDA margin range that you see for yourself this year? And second quarter wage hikes as well being priced in.
Yes, yes. I think you covered all the key components, right, that will sort of make up the margins for the next quarter. So if you really go back again to my earlier point, we have had consistent profitable growth over the 5-6 quarters, and we are working really hard to make sure that we continue the trend. There are going to be some headwinds in terms of the wage inflation kicking in Q2. But we believe that with the growth coming back in quarter two, we'll be able to sort of negate that and continue on the trajectory of profitable growth in Q2.
Okay, we'll leave it at that. We wish you the very best for the future. Thanks very much for joining us and giving